afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's a late one because there's been earnings out and movement everywhere. So, first things first, as far as the action today, second day in a row that the futures gapped up 7 to 9 handles, and it was a better sell than a buy, which typically is better, it's bearish behavior. Unfortunately, we were oversold, and guys thought it might be too easy for them to just come in and sell the market again, and I guess it was that easy. But anyway, market made a low around midday, came off the lows, well before, the earnings from after hours. So real quickly, I'll go into the chart of the spiders, and then I'll start going into the other charts. Here's a chart of the SPX, which is relation to the spiders. Here is, again, the breaking of the upper range. Here is the breaking of this trend that's been in place since June 4th. So right around here, nice spot to switch some gears from portfolio approach if you didn't already to a tactical approach. This was the day that IBD went into market in correction, and that was the day that typically when they do that, it's a good time to take some risk off. But anyway, we've been hovering down here, and it does really feel like we should at least test the 100-day, which is about 1395, and then the 200-day moving averages, both of them, because people follow different ones, is now between like 365 and 376. With a spot around 1376. So with that said, when actually there was some what's the word? There was some opportunity when when Amazon came out. I wasn't short the spiders. All of a sudden, market was flat. Started shorting the spiders. Apple got halted, and PS, and within a few little time period, that was down 90 cents. So that was some kind of think quick, after hours type of trade. I'll go into Amazon first. Amazon, seemed to miss on all metrics, and for the last few quarters, they always get a pass. This one, they didn't get as much of a pass, but it did come off the lows. On the floor, we were talking 204 to 212 is big support, right around that gap. Gap would have got filled to 196, but hit that support and came off of it. It also went through the 200-day and then bounced back. This was, the big support that, it would have been nice for you guys to have in place. This was the low coming across here, so this is how we come up with pivots. Some people ask me, how do I come up with pivots? Well, here is how, this was 206, and then coming into here, going backwards, there was another nice little pivot, and actually here's your 212. So this is where I was, trying to get this, this area, combined with this little point of reference. So into this area, from a move from 260, if you took Amazon short or shorted it after the number, nice little spot to cover. And then Mark, had a really good trade. He got long, when it started getting back above 212, and then when it went through 216, back above the 200-day, it also gave you another nice trade back to almost 222. And now I think that it's going to be a little wishy-washy, to be honest. I don't think it's going to just reverse and go nuts to the upside, but it might not just continue to get clobbered as it's discounted a lot. I think the same goes for Apple now. Apple came out and they come to me. They reported the third. I think people were more scared of the third quarter, and the third quarter was a little soft, but it was fine. Third quarter was actually more in line than last quarter. Last quarter I think it missed by like a dollar and change. Here it was like 30, 40 cents, not even. But for guidance, the revenues weren't as bad, but I think the street was looking for $15.50 or so, and it came out with like $11.50 guidance. Now, so the good and the bad of it. One, I don't think that Apple's going to have any problem whatsoever exceeding that guidance next quarter. Okay, so that's the good part. And the good part also is within probably a few sessions, maybe a few weeks, we're going to get some kind of pivot to buy as a swing for a move into the fourth quarter. So I'm happy this quarter is out of the way. I'm happy that Apple came out and did that guidance because it's going to be so attainable. And you know what? Apple didn't guide, to $15 a share and whatever it is they wanted for the revenue number. That was the analysts. The analysts got all excited, iPhone 5. They're the ones who put out that, that 10 million weekend estimate. Apple didn't do that. And then it came in 5 to 7. So anyway, with that said, the P is low. The product line is enormous now for Christmas. Tim Cook was supposed to be a supply chain specialist, so let's see him start showing his stripes. And I think all that comes into play, and investors will be pleasantly surprised, and traders who are out of the stock and are going to look for an entry and probably still have to trade it a little bit back and forth for a while will find that entry, and I'm hoping to find that entry. When I do, I'll buy it, I'll put a stop in, it'll be a swing trade, it'll be on my virtual trade floor. You guys will have the luxury of hopefully holding it with me for however long it starts acting better for, and I'll try and tweet about it as well. As far as the after hours action, it got halted and it opened and it tagged 585 on the nose. 585. I had an order in a 577. I figured, perhaps it would go between both moving averages. You look at the chart here, and you'll see, here's one moving average, which comes in at 586.94. Here's the other one, 574. So I figured I'm pretty safe buying it in this zone versus, the support from last quarter, and I missed that buy. But then there was a nice little buy. Guys saw on my virtual trade floor, I bought like 598, bought through 600, sold some 604s, then sold some 608s, and then right around 610, it looked like it was going to get through, and it couldn't, and now it's hovering around 600. So question is, how does it handle the next few days? We'll take a look. We'll look for some type of red dog reversal. We'll look if it opens down $5 tomorrow. Does it put a nice tail in like that? And then at some particular point, can this descending, channel start to break to the upside? And when we get that kind of pattern, we'll be back in there in the common stock. We won't have to worry about a massive event like we just had to, sit through. So there's going to be good opportunities. And I apologize for the call spread. It was worth a try. I bought the 635s and sold the 650s. And when it came in a lot, I wound up buying back the 650s, made like 80 cents on it. Then just to be a bit more conservative, I sold the 645s to take a little of the risk down, but still have, be involved for what could have been, a better action. But, it's a zero. Whenever you buy options, for me, I know you're taking a calculated risk, and it could be a zero, so you never want to do too much. You're not playing options to get rich. Some people do $1 on a dream in options, and every now and then maybe one out of 55,000 of them come in when you buy it at $1 and you could sell it at 8 to 15. More calculated is you buy $4, maybe you can make 6 to 12. 2 to 3 to 1 is usually the rule, I would think, for options. If you're going to do an option play, make sure you're in the camp to be able to make 2 to 3 times, especially if you're vulnerable to a zero. Now, what's really funny is, the market definitely likes to make as many people out there feel dumb or lose as much money as possible, and all the headlines all day long. And I was looking at it too. We're saying, the Apple response will be anything but subtle. Like you can go on Apple and Google it, and because everyone was thinking either a $40 to $60 move to the upside or a $40 to $60 move to the downside. Everyone brace. Meanwhile, it went flat after hours, and it might be down 5 right now. I'm not exactly sure. I was trading at 602 when I left. So the only people that win are, guess who again? The professional dealers who dish out the premium. That's why also you don't want to always do like a straight call or a straight put buy, because you want to finance it with some of that premium, so this way it doesn't cost you so much. Because so many times in my experience, I'll buy calls and guess a direction. I'll get the direction right, but because of the way the options are priced, I would lose money, and I started scratching my head until I started learning more about options. That's happened probably to a lot of you guys watching that. So who does win a little bit though is really the investor as well, because yes, we just pulled in 13 or 14%. Hopefully some of you guys did take down your tier size when we broke, if you look up here, when we broke the 21-day moving average, or you took a little bit of your tier off right here around 660. And recently I've been talking to investors, and I was like, what you could do here, just sell it in the money call. Take the premium, because 2 days before earnings, when you have an event, there's a lot of premium in there. So if you're, if you didn't mind holding the stock this entire time, if you want to sell some premium, they could have sold the 620s for almost $20 and taken in some premium and just financed some of this stock. Or, I was telling some guys, why don't you do this? Why don't you sell the 580s? Because the 200 days at 585. So this way, if it's a bad report, you're covered down to the 580. Then you could buy the options back, and save yourself the move to the downside, and then you're also about 120 points off the high, so it's safe for you. And if you're going to hold it anyway, why not? Or if it's not if it is a subtle response, you just keep the premium and let it just decay, so to speak, because this was only like a month out even, and keep it. And then once Apple sets up a new pattern, it'll go again, and you just got paid to sit in it, almost like you gave yourself a dividend. But anyway, enough about Apple. As far as the market's concerned, the Qs after hours are below the 200-day. You know my rule: if it doesn't reclaim it in the next 2 days or so, it's most likely heading in that direction, and that'll bring the S&P down to that 100-day, 200-day. There's been a lot of faulty action. The home builders, I know today, I tweeted about it a few times. I talk about upper level stops, so people ask me, what's an upper level stop? Really, this is an upper level stop. Okay, you have a really nice channel up here. I don't think it's game over. You're playing it for some type of momentum move to the upside, and what happens? It can't break out and engulfs this upper range. To me, I would have got stopped out if I was playing it for any kind of momentum, or at least, if we break the 21-day, you can come back to the lower end of this channel and test a 50-day. So you might as well preserve your profits. And then people said to me, oh, what do you mean by a lower level stop? Well, this would be your lower level stop. Okay, if it wound up breaking the 50-day change complexion and headed down to the lower moving averages, which is right around here, which is, I think this is the 100-day. So high level stop, mid-level stop. It kind of happened with the financials. I talked about high level stops just saying in Goldman Sachs. Goldman Sachs, if you go, I'll go to that one first. It was been trending, had a really nice move. Here's your high, here's your high or low, going up the spectrum. If you remember, I tweeted, I said, if you want to have a high level stop, this is your stop, right? 123. 123, you might as well book some profits, preserve your gains, because you just had a big move. All right, but now a mid-level stop would be, a little late, but still fine, is if it broke 118.12, broke this small uptrend since the breakout here on September 5th, for then what could be a move, back down to this area, which still would be okay, or the 50-day. So, and this trade's not really changing except for pent-up momentum is leaving. And if the correction goes deeper, this should happen. So here's a high-level stop, here's a mid-level stop. And, with the XLF, kind of do the same thing. Here was your high-level stop when it broke through this upper area, people who were playing for a momentum move through the highs. And this was your stop, and now it's almost, this is, I wouldn't say this is quite your mid-level stop, but so maybe this is your mid-level stop. And then if we get a further move lower, it could trade through the 50 and get to this area. So high-level stop to preserve your gains, maybe a little early to sell, but safe. It's breaking the 8-day, hasn't done that in a while, or the 21-day. And then this is the mid-level stop, and then when it breaks here, trade can change a little bit. So the key is knowing, your time frame, knowing if you are a guy that trades just, more of a momentum move and stick with it as long as these things hold their 8 and 21-day, or are you more of a macro guy that doesn't look at your account every week, every month, and you're like, okay, I'm in this, it's fine. Been in since, a year ago. I've been in since June. I don't care as long as we hold above the 200-day. But hopefully you sold some of your extra shares, because the last thing you want to do is sell when we finally break the 200-day. You look at the Qs, you had numerous reasons to sell well before coming into, this 200-day, and here's your other one. When here, boom, this was the day of the election, right? This was the day that, not the election, I'm sorry, unemployment rate, 7.8, sold. This is when we lost the 50-day. It was the first group to sell the 50-day, so here was your sell. Here's your retest of that area, failure, there's your sell. So the last thing I wanted to see you do is on tomorrow's open with Apple's earnings, if it goes down to 64, I don't want to see you selling down there. This is your opportunity to take a look to buy the dip. So just change your ways. If that's you, if you bought right around here and you didn't sell here, or didn't sell here, or didn't sell here, and you're selling tomorrow here, you're that guy that they talk about on TV. You're the guy that they say is retail, that buys at the high, sells at the bottom, and hopefully, you've been you must just be tuning into this show, because I think most people watching it have learned a little bit, and they're not doing that as much. But anyway, tricky times. We've been tactical since IBD went into market correction, which I believe was over a week and a half ago. We went from portfolio approach that was 2-3 times this year, which was very profitable, to now back and forth 2-way trade. Last few days were definitely a little bit tricky and a little frustrating, and now we'll see what happens. Now that the big dog reports are out of the way, maybe we sift lower, and then we find some support, and then we put something together, through the election and into the end of the year. But until we see something change, where we don't just open up and sell off, or breakouts could hold, or we reclaim some moving averages, I would stay tactical and we'll look for better entries. Scott Redler, T3 Live. Sorry again for the call spread. At least it was calculated and premium paid. And I do think that we'll make it back with this stock, in spades once the right setup happens, and I'll be sure to try and give it to you when I see it. Have a good night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.